Welcome everybody to another live stream. This time it's the NIO first quarter 2025 earnings report. As always, let me get myself sorted in the beginning, sending out a tweet about this live stream. Please feel free to share it somewhere else as well. And waiting a little bit until this live stream is filling up. And then, as always, I will be going through this earnings report. And later on, we'll have, well, actually, in just half an hour, there will be another live stream with the earnings call. So this time, we had to wait quite a while until we got to this financial report here. Please let me know in the comment section whether or not the audio is okay. Can you hear me properly? And then we'll be walking through this in a second and compare it to my personal expectations. Maybe I can start with the Seeking Alpha. With the headlines, misses top line and bottom line. I don't have the premium subscription as of now, but you can see the headline. It's a miss on both sides. Let me see. Audio is okay. Everybody's piling in. Almost 100 people. Great, let's go. Because, as I mentioned, we do not have a lot of time. Unfortunately, I'm on my laptop today, so I don't have a second screen, and it does seem that this laptop is a little bit slow right now. I hope everything works with the text setup, but nonetheless, let's dive in these numbers. So the vehicle deliveries, we knew already, 42,000 for the first quarter. First quarter are always low. What we didn't know was the vehicle margin, which comes in at 10.2%. I think, frankly, this is, I can already say that, below my personal expectations, although it's up from last year when it was at 9.2%. But actually, it's already down from the fourth quarter, right, when it was 13%. Total revenues at slightly below 1.7 billion. So as it misses the top line, the market has expected more than those 1.6 billion. I'll tell you in a second what I estimated. The gross profit was 126 million. Gross margin only 7.6%. Still better than the 4.9% in the fourth quarter of 2024, but still it was up at 11.7% in 2024 by the end of the year. So therefore resulting in a loss of operations of 884 million or a net loss of 930 million. This will be a very unpleasant sight for NIO investors. The cash is down to 3.6 billion. So they booked a huge cash outflow this quarter. If I remembered correctly, this was up at 5.7 billion last quarter. Let me quickly look in my into my Excel sheet. We're going to go into my personal estimations anyway in a second. But yeah, cash was 5.7 billion finishing last year. So this is a decimation of 2 billion USD. And I guess the market sniffed that out, given how the stock has been trading, lagging. Something seemed odd and wrong. And yes, this decimation in cash is worrying. It's not good because it's obviously decimating the runtime. And we cannot keep on having a net loss of 930 million given at this cash outflow, right? I don't know what we're going to hear as an explanation to that. If there's also some special, special circumstances for that. I haven't seen anything yet in this report that is mentioning the reason for it, because as you can see, also we did have equity placements, right? So cash was raised during that time as well. So that will be a big question mark and something where investors are obviously concerned about. Firefly Star deliveries, product upgrades. let's see, CEO and CFO comments. And by the way, I haven't read this report yet to the full extent, so please correct me if you find something that I'm missing out here in this live stream, or point me to what might be the highlight in your views. So in the first quarter of 2025, the company delivered 42,000 smart EV, marking a solid year-over-year increase of 40%. Since the beginning of the second quarter, we have seen a steady increase in monthly deliveries volume. In April, our product, the ET9 Firefly, had secured notable market share in premium executive market and high-end small electric car market, respectively. We have also witnessed the rising demand for Onvo L60. Well, yeah, from a low base. So in late May, the new ES6, EC6, ET5, and ET5T started deliveries with all-around upgrades. Based on this, we expect total deliveries of this for the second quarter to reach between 72 and 75K, representing 25 to 30% year-over-year growth. 2025 is a pivotal year for NIO product launch and technological innovation. On the technology front, we are advancing the smart EV experience and safety standards with our proprietary smart driving chips, full domain operating system, and intelligent chassis. Since late May, the first version of NIO World model has gradually rolled out. 2 vehicles based on Banyan platform, bringing significant upgrades in safety and driving and parking assistance. NIO World model will provide users with a safer and more effortless intelligent driving experience across various scenarios, William Lee Bin. Since the first quarter, we have implemented a range of cost control measures, including organizational restructuring, cross-brand integration, and efficiency improvements in R&D, supply chain, sales, and services, added Stanley Yu, NIO's Chief Financial Officer. Starting from the second quarter, the company aims to achieve structural improvements on the overall cost efficiency with continuous progress and operational performance. Much needed indeed. Okay, so nothing in the CFO and CEO comments on the cash situation that has deteriorated much more than people thought, at least than what I have thought. I guess that's the main takeaway so far. So yeah, that's now the main explanations for revenues and vehicle sales. Let me just quickly look again. Now 300 people almost have joined us. Looks like the live stream is running. Again, if you're joined later, this is the live stream on the earnings report, which I'm seeing basically for the first time here, walking through. And later on, I will do a second live stream on the earnings call with the management and the analyst questions. Biggest takeaway so far, I think a miss on both top and bottom line. I think the net loss is still very high at 930 million and a very fast deteriorating cash balance. That's concerning. Now, let me see other sales. Is there something interesting in here? The increased other sales over the first quarter was mainly due, they come in at 288 million, okay. Okay, nothing special in here. Yeah, the vehicle margin would be interesting. 10% compared to 9.2 in the first quarter of last year, but 13% in the fourth quarter of 2024. So the increase in vehicle margin from the first quarter of 2024 was mainly attributable to decreased material cost per unit, partially offset by the impact of changes in product mix. The decrease in vehicle margin from the fourth quarter of 2024 was mainly due to the increased manufacturing cost per unit as a result of decreased production volume, as Q1 is not one of the biggest quarters. Let's see what they say about 438 million in R&D, which is, I think, okay as a number. The increase in R&D over the first quarter of 2024 was mainly due to the incremental design and development costs for new products and technologies, as well as the increased personnel cost in R&D. So they are still either stuffing R&D functions or costs have simply gone up for R&D stuff. So that should be part of the cost cutting, maybe going forward. Let's see whether or not they still need some of those basic R&D research functions, which now that the lineup is, getting more and more complete, they may not need them anymore for vehicle upgrades and mid-cycle updates and stuff like that. Who knows? The decrease in R&D expenses over the fourth quarter was mainly due to the decreased design and development costs resulting from different stages of development of new products. So what do we still get? We get still another new Envo vehicle and another new NIO vehicle by the end of the year. That still needs some R&D cost, I guess. But overall, I think this 438 number seems to be okay-ish. It's not a bad sign generally, and R&D generally is obviously also about the future, right? What kind of results do you derive from that? What is more critical here, I guess, is SG&A. Let's see what's in there. So there is some share-based compensation in there. That's normal, representing an increase. The increase in selling general administrative expenses over the first quarter 2024 was mainly attributable to the increase in personnel costs related to sales functions. So was this still part of the Envo ramp where they hired lots of people, but now under-delivered in terms of what Envo has done for the company in terms of deliveries? The increase in sales and marketing activities and the decrease in selling over the fourth quarter was mainly due to the decreased sales marketing. Okay. Yeah, this number seems to be a bit high. So my estimations have been lower than that. And then this net loss in total resulting from that is also higher than what I was personally hoping for and expecting for. And therefore also the earnings per share at 45 cents minus 45 cents is higher. Now, again, here for the balance sheet, I don't see anything other than the usual legal blah, 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 that it's sufficient in their views for 12 months, but no explanation as of why the cash balance has gone so much down during that time. Maybe you can tell me your speculations in the comment section. Might be due to taking a new factory online with the Firefly factory, maybe maybe paying suppliers, maybe booking something else that was not in there in a financial report so far. In the past, I mean, with those 5.7 billion, NIO has been very, very well capitalized, to be honest, and it has been not draining as much as I thought it would have in the last couple of quarters. But now this time, it's so much faster than what I have personally thought of. So yes, something to explain in the earnings call, which will be in only 15 minutes. So let me quickly jump also into my personal estimations. As I said before, because of the fact that I'm doing this more or less live, I have not even edited my personal expectations in here. Let me see. You should now be able to see my Excel sheet, the business case, where I do my estimates. Let's see how it compares with the report. Unfortunately, I have a little bit of an issue here with one laptop screen only. I hope it works. So let me jump through that quickly. Make it a little bit bigger for you guys. So, all right, vehicle sales, 1.3.6 billion. Pretty much what I expected. So vehicle sales are on par. Other sales, I think I have higher expectations for that, because they only came in at, where are they? Other sales, 288. So yeah, pretty much in line on the top line, actually, with my personal estimations, just a little bit down. But yeah, I estimated a sales margin of 14%. So actually, I was hoping to get an increase there. But as you know, the eco margin came in lower at 10.2%. So obviously, that's a miss. Then the gross margin came in much lower than my expectations, 7.6%. as opposed to my 11.2%. And then let's just quickly go over R&D. I estimated 450 million, which I said is pretty much in line with what they have reported here. So that's 438. That's actually lower. I expected 500 in SG&A, but it's coming in higher at 606. And the net loss, I thought, might be 760, but comes in at 930. So 200 million more. Cash, I thought, will be down to 4.9. We're actually down to 3.6, if I remember correctly. So that's the big implication here, and most likely what the markets sniffed out about this earnings report before. I cannot imagine otherwise. Now for the, let's go for the KPIs quickly, the average sales price. If we go to the, that might be very close to what's the estimation here. Let's go here. I estimated it would be about 32,000 average vehicle price, and it is indeed, let me see, 32,500. So that's the implication of now selling also Onvo. The ASPs are coming down. With Firefly, obviously, in the future might be coming down further, depending on where the average sales price is averaging out. So yeah, personally, I have also expected that they would land at 75,900 for this quarter in deliveries. Deutsche Bank was expecting 75,500, so I'm a little bit more bullish than that, actually. But the guidance that we got today was 72,000 to 75,000. So in the recent quarters, NIO would rather land on the lower side of the guidance usually. And given the outlook, they may have already good visibility for that, and therefore might be a bit underwhelming in Q2 regarding the top line here as well. I actually done this old estimates versus new estimates sheet here, which I already shared with my patrons. Basically, before, my personal full year 2025 estimates have been close to 360,000 in deliveries, as opposed to what NIO management has guided with 450,000, right? Doubling sales. I don't think that's going to happen. And now I'm actually dialing that down to 337,000 for the full year, basically because of Onvo underperforming, as you can see, initially thinking it might do 165,000 on its own. Now I think it'll stay below 100,000, but NIO brand might be a bit higher than what I have personally estimated before. So that's how I land at these new full year numbers, which are lower definitely than what NIO is guiding for. What I do still think is that with a quarter of close to 130,000 sales in Q4, which I think potentially is in the making, we could get to a slight break even with these numbers if NIO proceeds with cost cutting and we start seeing that in Q2. I mean, definitely that's a must, given the runway that we now have. Otherwise, NIO would need to raise new cash. That's the unfortunate truth that we have based on these numbers on this report that we gotten just a couple of minutes ago. Very, very close to the actual earnings call. So they took their time to report these numbers. And let me see through the comment section whether or not anybody has a better explanation than what I had in this quick rundown of those numbers. That was done live, unprepared. So please excuse if I have not seen any of the specifics that I should have covered, but feel free to point that out in the comment section. So long story short, that's not a great report. That's not good. We knew it's going to be not a good quarter because it's on the top line. It's a weak quarter, Q1. Now Q2 will be a transition quarter between the old cars and the new cars. I think so far from what we can see, they have managed it fairly well. The guidance isn't that bullish, but it's also not a complete disaster. But what is the main concern for me is the 3.6 billion in cash currently. Will we see the cash burn narrowing in the following quarters? I think so, very likely. But will it be enough? That's the main question. So I would like to hear an explanation of where those 2 billion USD have gone. What's the problem here? Maybe, who knows? They are front-loading some of the cost in order to make the next quarters also look a bit better. Maybe paying some suppliers and R&D upfront, maybe booking all of those expenses for the new factories, the new brands and stuff currently in the weak quarter, because it's going to be the weak quarter anyways, right? So in order to make the next quarters appear better, that's the bullish outlook. That's the the silver lining here. But other than that, it's definitely not great to see this KPI going down. So pre-market NIO also down minus 3.8%. So yeah, market clearly sniffed it out. We're only 5 minutes into the actual management call. So I think I'll wrap it up here and jump over to the next live stream that begins just in 5 minutes. So giving me some time to set things up with the earnings call, which I'll be live streaming as always. So thanks for tuning in, guys. I really appreciate that. And we'll hopefully hear more clarity on those matters that I just covered here on these earnings broadly during this call, very close up to the management call. So I'll hop over. I hope you'll hop over too. Refresh your feed. If you're subscribed, you will get it in your front page anyways. If you're not, you should subscribe, because then you're also able to actually comment here during those live streams. Thanks for watching, and see you in a bit in the next live stream.